Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jason Zahn, Director of Equity Client Solutions at Bank of America Securities, to discuss a form of volatility control that monitors and reacts intraday during each trading day to market volatility. Jason, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
Tell us about fast convergence technology and what was the inspiration behind the innovation?
Well, fast convergence technology is our patent-pending form of volatility control that monitors and reacts intraday to market volatility. Target volatility is largely commonplace within index-linked products today. However, even though markets have evolved over the last 10 to 15 years, this technology has remained largely unchanged. Target volatility in its current form reacts at the end of each day, and often there's 1 to 2 day lag. And given the speed of which markets transpire today, we took the opportunity to improve upon this by using intraday data, and therefore we're able to much quickly and more efficiently reduce and mitigate drawdowns when there's a shock or risk to the market and re-engage when markets normalize. And that's really the genesis for the fast convergence technology.
You said that markets have fundamentally changed. How and why have they?
Well, it's a great question. So market fragility drives market risks today. And fragility means that on the surface, markets may appear calm and sanguine, but that doesn't mean they're not susceptible to sudden violent market drawdowns. And over the last 2 years, these have become more prevalent. For instance, we've seen 2 of the largest fragility shocks, one recently with the COVID drawdown in early last year in February. Second point, markets react much faster than they ever have before. You could see this with the proliferation of high frequency trading. I remember when I started my career on Wall Street, we had paper tickets, and those are a way of the past. The time it would take me to write 1 paper ticket today, I could do thousands and thousands of executions. So it's really changed in the blink of an eye. I think it's a function of just the amount of data available in the public domain and the ability to get access to that data. So really, when we were looking at optimizing a strategy, this intraday data existed for decades, and we were able to use that to build the fast convergence technology.
This technology is applied to the Nasdaq 100 TR index. Why Nasdaq?
Well, the Nasdaq reflects a changing market in a changing world, and it's remarkable to see how this has transpired over the last year. You have names like Amazon, Cisco, Zoom, Netflix. These are all work from home all-stars. And it's tremendous the amount of success that they've had with the rally of the markets through last year. Secondly, and this is a really interesting statistic that I just figured out, the sheer number of patents being filed from these constituents, it really drives and reflects innovation through technology. Lastly, and most importantly, it's outperformed traditional beta benchmarks, such as the S&P 500, 11 out of the last 12 years. I mean, that's truly remarkable. We like to say fast convergence technology is the engine, but the Nasdaq 100 is the high-octane fuel that it needs to perform well. So, just to summarize, we've created the Nasdaq FC, which contains 2 constituents, the Nasdaq 100, Total Return Base Index, and cash.
And Jason, to wrap up here, 2020 was a turbulent year. How did the technology perform during last year's volatility events?
Well, it was actually remarkable. We started our roadshow in early January, kind of preaching this fragility is a new volatility event. And almost right away, we saw proof of concept with the initial COVID drawdown. It's immediately more effective than traditional volatility control in mitigating drawdowns and preserving capital. And then in the summer, back when things started to normalize, it re-engaged in the NASDAQ and gave access to the outperformance that we had hoped. And I do want to give you a few statistics numbers here. As with all investments, future performance, past performance is not indicative of future returns. But 2020, we were up about 25% and 20% since live date. So really, we're super proud of how it's done, and it's just been a great story all around.
Jason, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Jill, great to be here. Thanks again.